Well, thank you for tuning in. You're watching the Property Guide in ET now. This is your one-stop guide for property investments in the country. We're going to start a brand new financial year and we're going to try and find out what the smart investment options are for you in this new year. Will real estate at all promise to give you the kind of returns that we've always hoped real estate would give us? Our email ID is at the bottom of your screen. If you have any questions, just write to us. It'll be our pleasure to answer any question at all that you have. On the show this week, we'll find out what the top investment options are for 2015 and we'll answer questions you sent in from Mumbai and Chennai. Ramesh Nair, CEO and International Director at JLL, joins me in the studio. Ramesh, it's always a pleasure to have you here. And of course, Ravi, who comes in from Cushman Wakefield. Gentlemen, thank you so much for coming in. I know that we made you all both do a lot of homework for the show, which is something that makes me really happy to see all the pieces of paper spread across the table. We're starting a new financial year. Before we get to talking about investment options, I want to understand from both of you, if there's any sort of trigger at all you're expecting in this new financial year to improve the real estate market from what we saw play out in 2014-15. Ravi, you want to go first?
Yeah, I think the only and major trigger which I expect from the new financial year is the budget's behind us and there's a new government in place. Hopefully those states who have the same government as in the center will have far more accelerated infrastructure playing out in their favor, and therefore that's a big trigger.
Ramesh, we were talking about, reduced interest rates. The truth is that the banks have not passed on those lending rates to customers. There is a little bit of what I understand, some strong phone calls happening between the finance ministry and various banks. So it will happen over a course of time. But is that the trigger that you're hoping for? Do you think it's going to take more really to see, sales start to tick again in our real estate industry?
I would say we need three triggers, the three I's, interest, infrastructure and income. On the interest front, definitely the ball has started rolling. It's work in progress. Banks will have to do something in the next 1 month. On the infrastructure, if you saw the budget, everything was focused around infrastructure. I think that's definitely going to play a positive role. And on the income front, I think this Make in India campaign, which will create a lot of manufacturing jobs. So all three looking in the right direction. The government needs to now start implementing.
Execution. We have to see how
So I think the ball has started rolling and we would see some good positive sentiments this year.
All right. So a lot of these things you all have both said at this table in the past. I mean, in the fact that, we have a new government in place is not a new government anymore. It's been around for nearly a year. So we're going to have to see more than just this entire list actually play out. But what I want from you today is a list of recommendations that you believe are going to do really well, irrespective of whether or not your three I's or your new government actually plays out. So the first recommendation I want from the both of you is a high-risk, high-return investment. Ravi, do you want to give us your recommendation first? If I were to go out and if I have the ticket, if I have the kitty to go out and buy something right now that will give me very, very strong returns, more than, the 10% or the 12% that you would normally expect, what would that be?
So we've seen in the past some of the factors that make real estate tick essentially is to stick to the fundamentals. The tier 1, which we call metro cities, seem to be right up there on the charts. From those, I think I would pick Mumbai as a city to fall back on for high risk, high return, particularly given the trend and the shift from South Mumbai, which is the CBD of Narendra Point, into Bandra Kurla complex and locations around Bandra Kurla complex. So the Bandra East location, if I could just drill down in a micro sense and pick that up for a high risk, high return, clearly we have seen the Bandra West being a very posh high-end residential location, and Bandra Kurla complex take off. We're seeing prices in Bandra Kurla complex almost 50% of Bandra West, and that kind of once the trigger of offices moving in, social infrastructure already catching up. We're already seeing 3, 4, 5-star hotels there, education institutes, schools, international schools, hospitals, all coming up in those locations. To my mind, it's only a matter of time that the real estate prices will bridge and the gap will further narrow.
You listed out all the pros of Bandra East. What are the risks? Because this is a high-risk investment. So if, as an investor, I'm going to take your advice today, what risks will Bandra East pose?
The risk is that the state government has announced at least 3 corridors
as part of
which
the
will
urban
be
plan,
congested
yes,
as part of the urban plan. One road will link the Eastern Expressway from back of Chunabhatti The other road will connect the Bandra-Worli ceiling soon from Bandra Kurla complex. And the third one will connect to the Western Express Highway. Now, if these, road infrastructure projects do not shape up in the next 2 years, which is the scheduled time the government has given us to believe, then to my mind, the location may just get choked up further.
In fact, worse still, if the construction stretches for 5 years or for 10 years, which is something we've seen happen in the city, it'll probably be even worse, right?
Yes, and mind you, the Bandra Kurla complex is the only hub which provides for 8 or even 10 FSI, which is that high. And so the density of construction over there is humongous. And if you don't have civic infrastructure catching up, be it roads or even for that matter other civic infrastructure around it,
so that's the risk.
Yeah.
What sort of return would you expect from a BKC? Or a Bandra
I would
East?
expect at least a 25 to 30% jump in the next 18 to 24 months in the prices. Should these projects even just kick off and start, be getting implemented.
All right, and we'll hold you to that in the next couple of years. We will pull this up again. Ramesh, what's your high risk, high return investment idea right now?
In terms of high risk, high return, my recommendation would be to look at city-centric, close to the CBD, luxury residential, which are about to be completed. I'll give you a typical, in 3 cities, I would say Mumbai, Bangalore and Chennai. In a market like Mumbai, I would take sub-markets like Worli, Lower Parel, Sivri. Now, if you look at these markets, just last year, close to 4,000 luxury residences were launched. But less than 50 were actually got sold, which are nearing completion. So there is a huge demand for projects which are getting completed, but not enough supply hitting the market. So that's the reason I would say there is risk because a lot of under construction, but the return would be higher because the projects are getting completed. So to look at projects which are getting completed in these city-centric locations would be my advice.
So if I looked at a project that was getting completed, wouldn't the price have already run up? Because the general view is that if I get in at launch, pre-launch, then I'm taking on the risk, but I have that much room for appreciation. But if I get into something that's almost complete, wouldn't that cut down my room for appreciation?
Very good point. But the quantum of supply is so less in the ones which are getting completed, so it will see a lot more appreciation than the ones which are under construction because of those 4,000 units getting launched in a city like Mumbai, for example. I think one should look at similar opportunities in Mumbai, Bangalore and Chennai, city-centric, close to completion, and where you could get position in the next 6 months.
So, for example, in a Mumbai, that would be central Mumbai. That would be in and around a Lower Parel, for example.
Lower Parel, Worli, Sivri, these kind of locations.
Okay, and the risk here would be the fact that the ticket size is upwards of 5 crore rupees?
3 crore plus. The other risk is if you hold on, then there would be a lot more stock hitting the market. So if one is looking at, let's say, a 3-year kind of an exit, we believe this would be a good investment to look at.
All right, I heard this anecdotal story, and I'm not even sure if it's true, where someone told me that if every HNI in Bombay bought one of these high-end apartments in Lower Parel, they still wouldn't manage to sell enough because there are so many under construction. Is that true? Are we constructing more than the market for it?
I think there are enough HNIs in this city. We have, if you look at the overall definition
of HNI.
Overall definition of HNIs, if you look at 120,000 HNIs in the country, of which around 55,000 are based in the city. So I wouldn't agree with that figures. I think Mumbai has a lot more rich people than any other city in the country.
Let's hope all of them want to buy a house in the next couple of years. Welcome back. You're watching Property Guide in ET Now. A happy new financial year to you if you're enjoying your long weekend. We have 2 wonderful guests with us. Both Ramesh and Ravi are helping us pick out interesting investment options in the real estate market in this new financial year. We talked about high risk, high return investments. We're now going to talk about more conservative ideas if you're not exactly a high risk kind of investor. Ravi, what's your conservative idea for 2015-16?
Again, I would stick to the metro cities, and probably pick out a location each, if you permit me. So let's say Mumbai, right. And I'm again backing on some of the service sectors like the IT service sector, which is doing well for itself. The Thane Belapur belt in Mumbai again looks good to me.
And what sort of return do you expect on a belt like that?
To my mind, you will see about 10 to 12% per annum kind of growth in pricing. Then Bangalore, which is again the great IT hub, our projections show that given the revival of the economy, we will see huge absorption happening again in Bangalore city in the next 2 years. And that would mean, again, locations probably towards the northern side, the Hennur Road, Thani Sandra, which have good connectivity by road, let's say even to MG Road, which is just 10 kilometers away. And then finally in the NCR corridor, to my mind, the DMIC, the industrial corridor from the IFCO Chowk, particularly 3 nodes, the Bhiwadi, the Neemrana, and there's another Dhorapur. So these 3 nodes will probably keep seeing traction in the industrial, demand.
Is that really a conservative idea? It seems more like a high-risk idea.
No, it is not, because the infrastructure there has already played out. DMIC is one of the more mature industrial corridors where government has already invested. Neemrana has already seen Japanese zone taking place. Korea is again looking at investing into a Korean zone over there. Bhiwadi has seen a lot of automotive companies over there, and there's big industrial activity. So I think this industrial corridor is already seeing a lot of action. Prices prevailing there are between 2,500 to 3,500 rupees a square foot, and I think 10 to 12% per annum growth in pricing will probably be sustainable given the lot of industrial demand.
All right, so the Thane-Airoli belt in Mumbai, North Bangalore near Hennur Road, and the DMIC stretch in the NCR region. Ramesh, your conservative ideas?
In terms of locations, I would recommend middle second tier developments in Bangalore, in Chennai, and in Pune.
Explain to us what second tier development is.
Second tier means not luxury, somewhere in the middle income category, in these IT corridors of these 3 cities, so Bangalore, Chennai, and Pune. And in that, the top pick.
Hang on, so that's a ticket size of what, 40 to 70
40 to 75 lakhs kind of a category. Okay. So the pick out of the 3, I would recommend all 3 IT corridors in these locations. The best pick would be Hinjawadi in Pune. So what we're looking at is prices haven't gone up crazy like in other cities. Unsold inventory still under control. Because the manufacturing activity and the IT corridor activity happening here, easy to find tenants. And the secondary market is also vibrant. So exit focus is also taken care of. So those will be my recommendations for a conservative investor.
Well, you did mention Hinjawadi in Pune, but you didn't give us locations in Bangalore and Chennai. Do you want to give us locations?
Again, the IT corridors. Bangalore Outer Ring Road, Chennai Old Mahabalipuram Road.
All right. And what sort of returns would you expect from an investment like that?
I think this year, JLL's overall estimate for residential property returns, capital appreciation across India is in the 6 to 7% mark. So don't have too much of expectations, but nobody buys property for a 1-year investment point of view.
So what we're looking here, say we're looking at a 10-year investment here, and we take your advice and do the 40 to 75 in these 3 locations. What are the possible risks I could encounter in an investment like this?
See, the biggest risk across the country is oversupply. And one needs to research markets or micro markets to figure out where is all the supply coming in. If there are markets like we saw that story in Greater Noida, that today so much of supply is there, and one needs to research with the kind of make sure you don't get into the herd mentality. There are 25 developers launching projects every other day. Prices will have to come down.
So those are the recommendations, and if you have any questions about what you heard on the show, feel free to write to us. Our email ID is at the bottom of your screen. In fact, we're going to try and answer some questions right now. Padmini P has written in, she wants to buy a 2-bedroom ready-to-move-in apartment on the Pallavaram Thorepakam Road in Chennai with a budget of 60 lakh rupees. Kindly recommend some good projects or builders. Ramesh, you're the Chennai expert, and this is a neighborhood you have recommended on the show in the past. Someone who wants a ready-to-move-in, so obviously she's an end user. What would you recommend for her?
So a couple of developers, Mantri Serene, Plaza Tranquil Acres, Plaza Bounty Acres, 5,300 to 6,000 price range. So these are the 3 developments I would recommend.
All right, let's quickly take another question. Chetan Shah has written in, he'd like to buy a plot of land to build a home on. The desired use is a weekend home or later as a retirement home, he says. He wants about 1 acre and he has a budget of 2 crore rupees. Preferred location is between Mumbai and Pune, the surrounding areas, maybe between 170 kilometers of Mumbai, he says. It's important to have an uncongested, developed road access, good water, electricity supply. Please give me some good locations. He's being very specific of what he wants. So, I mean, there are the obvious ideas. There's everything that's going on around, say, a Lonavala or a Karjat. But are there any new ideas that you can give him?
So I think given the kind of agglomeration we're seeing in Kalyan and beyond Kalyan in the peripheral locations of Mumbai, suggests that he could stick with some of the locations around that vicinity within a 5-7 kilometer radius. Say in and around Kalyan, there are locations like Vasin, Shahpur, Kasara, which he could bank on. And then there are others which are connected very well with the rail, the Badlapur and the Ambarnath locations, where the prices are still affordable. And
what do you mean by affordable? What would 1 acre of land cost him?
So he's got a budget of 2 crore per acre, which is a decent budget. And even if he's right on the main highway. So these locations, by the way, are also connected by road. He wanted to know the NH3 connects very well and brings him into the city well. So even if he's not on the highway, which is not a good thing to be in residential, even if he goes off by a kilometer or two, he would get whatever he wants in his budget in these locations.
I will quickly take another question. Sushil has written in, he wants to buy an apartment or a builder floor, that's specifically, nomenclature they use in Delhi, with a budget of 2.5 crore rupees, either Delhi North or Delhi West. The property should be ready to move in and have at least 4 bedrooms. Please give me some good locations on what plot size I can expect for a builder floor. Ramesh?
Shalimar Bagh, Ashok Vihar, Pitampura. Typical builder floor, 225, 250 square yards would come at around 2.25 crores, and around 300 square yards would come at around 2.75 crores.
Welcome back. You're watching the Property Guide on ET Now. Thank you for staying with us. It's time for our Meet Your Developer segment. Munish Doshi is a managing director at Acme Housing India. He's been kind enough to come into the studio. Munish, welcome to Property Guide. Thank you for joining us. I want to first, we've been talking about this through the show, the fact that we're starting a new financial year. The financial year that went by was not great for builders like yourself. Just so our viewers know, you're someone who focuses specifically on Mumbai. How bad has 2014-15 been for you, and do you expect the new financial year to be better?
We expected, there were a lot of hopes from the BJP government, from the corporation. So what we thought that there will be a lot of demands, which unfortunately never took place. A lot of money, people coming from abroad. Yeah. A lot of NRIs would like to invest into India, which never happened. But over and above, the bigger jolt was the new development control DCR and the new DP.
This is specifically for Mumbai.
This is specifically for Mumbai.
Yeah. In terms of, increased service tax, starting the new financial year.
That was the last.
Is that a rude shock you had to send to all of your clients?
In fact, we expected a lot of benefits for the affordable housing, which never, in fact, it made the housing more unaffordable.
Interestingly, we did some research before you came in, and one of the things that I like to ask the builders, whether or not they charge extra for parking, which they're not allowed to do, and from what I understand, you don't charge extra for parking. Parking is included in, it's free in all of your buildings. But what we did find out is a long list of delays, and I'm going to ask you about them. You have the Oasis project in Kandivali. It was, I think you started pre-sales in 2008 with a promise of 2013. That promise has now been moved to 2018, which means this project has been under construction for 10 years or will be under construction for 10 years. Am I correct?
It's not 10 years, but it is 8 years,
Yeah, okay. So what happens, what is your response to consumers?
It's a very classic example of how helpless a developer is or becomes. When we started this project, it was one of the cleanest projects a person can think of.
Clean in what way?
Clean in the terms of all permissions from corporation. Clean in the terms there was no encroachment, nothing. Over and above, we went out and we purchased a right-of way for our customers by paying a handsome amount to the landlord, the vendor.
Yeah.
So we thought that, okay, everything is clean. We started the work, we got the approvals, and then came Mr. Subodh Kumar, our commissioner. He changed the rules. 3 years, complete Bombay, all approvals were stalled.
Yes.
because he came up with this fungible thing, so we had to, there was no option for us. And then came now a recent jolt that there was a garden on our property in this new development control board. It took us 3 months to remove that garden, to make the corporation people understand that there's a building standing out over there. We have paid the premiums. I got an IOD of 21 story, and you are saying that there's a garden.
All right, so I have two questions for you right now. For any of my viewers at this point who have bought in this project and been waiting for over 5 years for possession, what is your response to them? Are you offering some sort of compensation? Is there an email ID that they can get in touch with you at, where they can get information on what's going on? Can you tell us?
In fact, 90% of the customers, we have already approached them. I'll say at least 20% we have bought them back. Even in the bad market, we had said, and we are given with interest, we had given them back. The balance people do not want to do that because the rates have gone up. So they said, okay, no, I have bought at this rate, I do not want to cancel and do that. Otherwise, still, if people want to cancel, we are, helping them.
So they can
out.
get in touch with you in particular? Give out your email ID that they can get in touch with you, right?
It's md@acmehousing.com.
All right, that's at the bottom of your screen. If you need, specific information about delays at Acme, or you're having some sort of a problem, write to that email ID, and Munish will get in touch with you. Let's also talk about Acme Ozone, and this is in Thane West. You've had some delays there as well. Tell us why.
What we had thought that, okay, when a developer does a pre-launch, he sells it to investors, who ultimately sells it to the actual user. So we thought that, okay, why not let the actual users earn by that? So we started a pre-launch telling the customers that this project is going to be started after 1.5 years. But you're getting a benefit of the rate, which normally another customer investor would have got. And we have taken only a small amount for them for the booking. So that's the delay. It's not actually a delay, but it has been told to people that, okay, it's going to start after 1.5 years.
All right. So also tell me this, what else are you planning? I mean, we know of the projects that you have under construction. There's Boulevard in Andheri East. There's Acme Alenza and Ghatkopar West as well. What's new? What are the projects you're planning that haven't been launched yet?
In fact, we are doing already 2 SRAs, but there's a large SRA which we are doing at Andheri East, Andheri and Jokeshwari East, which will be launched maybe by early next year, 16.
Do you have a fix on what sort of pricing you will have on that project?
It's too early.
It's too early. Munish Doshi, thank you so much for spending time with us on Property Guide. I'm going to put Munish's email ID on the screen one more time. If you need to get in touch with him in person for anything to do with Acme, feel free to do so. Or write to us and we'll have him come back into the studio and answer your questions. Thank you so much for watching Property Guide.